supposed to be weakening, the economy weakening. We have fellows like Mike Wilson saying that the numbers are going to be too high. He's that great Morgan Stanley analyst. And what's flying? It's the industrials. The industrials should be crashing right now. Now, we have a terrible market today. And I think it's kind of a hangover realization that maybe there was more to that employment number than we thought, particularly because China is opening. But he says stay defensive, and our defenses have done very well. But I point out that maybe we could look to buy an industrial the way down here. That could be a good thing to do.
Yeah, and he likes the defensives because they're the ones where, and the defensive healthcare, staples, utility. We own a lot. We don't own any utilities, but we have tons of healthcare, tons of staples. It's because they're the ones that can hit the earnings, whereas growth stocks, he warns, especially in tech and the consumer side, they have earnings risk. And when earnings come down, typically stock prices will fall.
What happened last week? When you had a Marvell Tech guide terribly. And I was most concerned they would do that, suggested that we sell some, and then boom, stock doesn't go down. So, I mean, maybe we're in an era where tech is not, hardware is not in purgatory. Software is still very bad. We'll see that with MongoDB, I think, tomorrow. But the place to be are a Honeywell on a downgrade.
Mm-hmm. Yeah, well, if you think about Honeywell, they used the pandemic to right-size some of their cost structure. They took a lot of costs out, where we're just starting to see that now on the tech side, whether it be FANG, Meta Platforms, Alphabet needs to do that as well, Microsoft too, Amazon focusing on cost well. So they're all ahead of the curve, and that's why their earnings have been more resilient, and that's why their stocks have been able to rally.
I don't like parabolic moves.
Hey guys, let me just come in here quickly. If you want to get into Honeywell and you're thinking about getting into Honeywell, I do think 217 is a bit high. I would have liked to see us maybe around the 180, below the 200 mark. That give you time to run. About Marvell, just quickly about Marvell, let's tell you that they're not, they're human, so they make mistakes though. Marvell, I myself thought Marvell would have gone down, but actually just stayed steady. But let's just go back. I just want to kind of jump in and let you know where you should be thinking about Honeywell if you're going to Honeywell. But let me just jump back to the morning meeting with Jim Cramer and Jeff Marks.
They tend to lead something down. I would wait here on the Honeywell. Parabolic move, oil. We made a big trim today.
Yeah, that's going to come out a little bit later this morning, but we're going to trim some Halliburton today. Oil's had such a nice run lately. We've been big buyers
and we have
Coterra, Devon, and Pioneer as well. Halliburton got back to this 38.70, right under 40. It's been topping out lately. So, yeah, we're going to trim some. That will be out later this morning.
Right. Now, I also want to point out that because China is reopening, and the way they're doing that is by saying basically what we have is Omicron, not the really bad one. So
anyway, guys, just want to jump back in quickly. So as you can tell, they did trim They did trim Halliburton this morning. If the guys are in my Patreon, they would have gotten that notice already early this morning that they trim Halliburton. They still love, and I do love Devon and PXD, which is Pioneer Natural Resources. My problem with Halliburton, why I don't like it very much, is because of the dividend. It is one of the oil stock that doesn't give the highest dividend, so you don't have much of a dividend to fall back on. That could be one of the reasons why they may be selling it right now as they see it goes up 50%. So anyway, guys, I just wanted to kind of jump in and let you know about that, but still stick with Devon, not because they're selling Halliburton. It's just different for different oil stocks, so continue doing that. Let's get back to Jim Cramer and Jeff Marks for the meeting.
So therefore, it's like the flu, so we're going to slowly open, but that's going to cause oil to trade higher because they'll need probably 1 million more barrels a day there if they really start hitting their economy. And if that's the case, then I think that we'll be able to make more money than the rest. But we want to be careful. Mm-hmm. We've had a very big run with oil, and we don't want to give it back.
Yep. Meanwhile, too, the market is technically said to be overbought. According to the S&P Oscillator, it was at 5.39% after Friday. Typically, anytime it's above 4%. The market is overbought. So consistent with our discipline to just find something and do a little trimming here.
Do it. Now, also, in terms of why I know I should be more concerned about the market, but the dollar's weaker. I don't think oil is going to shoot up very, very big. We got that Friday number, but that was right after the Fed chief said, listen, we're going to have to take these paces slower. And yet here we come in, and you got like a PepsiCo, which I happen to like very much, down very big. You got the defenses down. You got the industrials hanging in. So I do think that there are a vicious number of cross currents, and the best one may be by looking at Starbucks, because Starbucks is a position we've had. It's been a home run for us.
Yes,
And I come back and I say to myself, well, wait a second. I totally understand why someone who liked it here may want to take it there, but we liked it here, and I think we take it to at least to 110.
Yep. So the story today, Deutsche Bank, they downgrade the stock. They're not negative on the company. They just think the easy part of the move, which I think Jim just highlighted around the analyst day, has probably taken place. They do envision a bull case scenario, though, where the stock could trade at 25 times $5 earnings for fiscal 2025. Part of that, I'm sure, would be with their aggressive China expansion plans and U.S. comps staying strong.
And they have a
Anyway, guys, so we'll get back to hear some more about Starbucks, but I just want to ask you, are you in Starbucks? Because I know we've been pounding the table on Starbucks a lot over the last couple of weeks. But at no 103, it's getting back to where it's would be. I had Starbucks for a while. I hold it for a while. They give a decent dividend, so that could make it easy. But if you're not in Starbucks and you want that stock, you'll have to wait for a pullback. All depends on how much you have. I wouldn't be trimming it right now. Even though they're trimming it, I don't totally agree with the decision. They're saying that the outlook is good. If because of one downgrade, I would not be selling my Starbucks, because you could still get a dividend to cushion you. And the stock is just getting back from where it has been within the last 6 months. It has been under pressure, and Starbucks is just getting back. So I don't agree with the decision to sell into Starbucks. I think it have a lot of room to run. I think Starbucks will do great things. But let me go back to the meeting again, guys, and take in some more stock advice from Jim Cramer and Jeff Marks from the CNBC Investment Club.
A terrific membership program. By the way, I happen to have Volto on tonight, which has the best membership program in the country, which is pretty amazing. I'm a member of it too. It's a great app. Now, just go back on Starbucks for a second. When I last talked to Howard Schultz, he's talking about how the numbers that they're going to continue to put up, the number of stores, are really rather aggressive. But I think most exciting is they're still not saturated in China. There's still many places that need more Starbucks. And he happened to be in Milan. He was showing me a line in Milan. Milan is I happen to love Milan. It's the coffee capital of the world, as far as I'm concerned. So I just don't think, I think it's rash to take some off. Also, let's talk about another that's a winner that I don't want to take off, but I understand people are saying that the numbers may not be met, is Eli Lilly. Now, Eli Lilly, the numbers tend to get ahead of themselves. This has been a constant problem. And so then people just say, well, I don't want to be in there for the quarter. I say, I'm not saying that Lilly's Apple, but I'm saying it does not make sense to try to trade this stock.
Right. So this comes Cowen. They increased their price target to $430, so another $60 from here, from $390. This comes ahead of the company's 2023 guidance call, which is on December 13th. Cowen writes that they think 23 consensus estimates are a little too high. There's been a couple analysts that have actually said this in recent days, but they meaningfully raised numbers for 2024. So the point Cowen makes is that if the stock falls on a disappointment 2023 outlook, it's a buying opportunity.
Yes,
again, too hard to trade in and out of these stocks.
And all these different numbers saying that that the numbers are too high, and yet everybody keeps lowering numbers. That's not going to happen. By the way, there was a text put out this weekend, very interesting, at Johnson & Johnson. There had been some concern that they're interested in buying Horizon. Now, Horizon is a very...
All right, guys, let me just jump in here on Eli Lilly, because I think it makes sense to jump in right here. Man, I have seen that stock rise from the 335 to 370 as we watch. Wow. So the people that got in that stock early is feeling really, really good. They're about to report, so most likely, we don't know what's going to happen. Eli Lilly is a very strong company, but sometimes when they report, stocks do drop on the report. I'm not sure if that's going to happen, but if that's happened, as Jim Cramer said, that's going to be the opportunity to get in. If you see it goes in maybe like a 340, 350, you will be good, because you know it says 372, so you will get back in there, guys. Anyway, guys, so the guys that are on my Patreon, and if you're not in Patreon and you want to see everything we do and you want to get these videos full script and get everything that I'm doing, please consider joining my Patreon, guys. The link would be in the description. Anyway, guys, thank you for watching the video. Please don't forget to comment and subscribe. And I'll see you tomorrow when we take another video from the CNBC Investment Club and give you a reaction.